Tired of the routine of exchanging time for money? Here we're going to unveil 3 investment strategies that are changing the game. And yes, they're simpler than you think. You don't need fancy suits or an office on the 50th floor to see your wealth grow. Ready to make every penny count? Pay attention, because what's coming could be the beginning of your journey toward financial freedom. Passive income is often shrouded in a halo of mystery and unrealistic expectations. Let's make it clear from the start. It's not magic money appearing out of nowhere, but it's also not an unattainable myth. There are real people, every day, generating profits while they're at the gym, learning a new skill, or even while having coffee with friends. How? With smart investments and strategic financial decisions. Say goodbye to the outdated scheme of working more hours to earn more money. Here we'll show you how your money can start working for you, how to choose investments with passive income potential, and how even small amounts, if invested wisely, can grow substantially over time. And yes, we'll also talk about the risks, because smart investing is about knowing both the opportunities and the challenges. Our first stop on the route to passive income is the world of real estate. Thought you needed a fortune to get started? Think again. With real estate investment trusts, you can enter the real estate game for less than the cost of a smartphone. These trusts are publicly traded and are like buying shares in a company that owns, operates, or finances income-generating properties. So, how do you make money with this? These trusts are legally obligated to distribute the majority of their taxable income to investors. That means regular payments directly to your pocket. We're talking about shopping centers, office buildings, apartments. By investing in them, you become part owner of these properties. And the best part is the automatic diversification, because you're not putting your money into a single building or land, but into a portfolio of properties. But not everything that glitters is gold. It's crucial to choose the right trust. You need to look at its performance history, the quality of the properties in its portfolio, and its ability to manage well in both good and bad times. As always, the advice is to research thoroughly or talk to a financial advisor before opening your wallet. And remember, real estate investments are not just for the wealthy. Nowadays, with a modest initial investment, you can get your slice of the real estate pie and start building that flow of passive income we're looking for. The second key to unlocking passive income lies in dividend-paying stocks, often an underestimated gem in the investment world. Unlike gains obtained from selling a stock at a higher price, dividends are payments made directly to shareholders simply for owning the stock. Think of it as receiving a portion of the company's profits, a tangible reward for your investment. Selecting the right dividend stocks is like picking ripe fruit from a tree. You should look for solid companies with a proven track record of dividend payments. These are often large corporations with established business models and a steady income flow, able to regularly share a portion of their profits with their investors. But don't just look for the highest dividend yield. That can be misleading. A high dividend is not always sustainable. Instead, look for consistent growth and a healthy dividend payout ratio, which is the percentage of earnings distributed in the form of dividends. A too high payout ratio may indicate that the company is not reinvesting enough in itself, which could jeopardize future growth and the sustainability of the dividend. Even in times of market volatility, a well-chosen dividend strategy can offer shelter and a continuous source of income. Investing in dividend stocks allows you to benefit not only from periodic payments, but also from the potential appreciation of the stock value over the long term. It's a proven strategy that not only boosts your ability to generate wealth, but also gives you the flexibility to reinvest those dividends for a compounding effect or use them as a steady cash flow, depending on your financial goals. With a strategic approach and a bit of patience, dividend stocks can become a robust source of passive income that pays you for being part of a company's success. The third door to passive income opens with the futuristic world of cryptocurrencies, a financial universe evolving faster than any other in history. Here, you're not just buying and selling digital coins. You can put your crypto assets to work through something called staking. It might sound technical, but at its core, it's a fairly simple process with an impressive income potential. Staking is like earning interest in a bank account, but instead of keeping your money in the bank, you lock up your cryptocurrencies in a blockchain network to help operate that network. In return, you receive rewards in the form of more cryptocurrencies. This process is part of what's known as proof of stake, a method many blockchains use to secure their network and validate transactions. But here's the interesting part. The return rate can be significantly higher than that of a traditional savings account, and often much more attractive than other traditional investments. However, it's not without its thorns. The world of cryptocurrencies can be volatile, and reward rates can change rapidly.
If this video is opening your eyes to finance, hit like to support this channel and help us keep uploading more content. Comment on your biggest revelation so far and subscribe with the bell on so you don't miss any financial secrets. And if you have a friend or family member who could benefit from this video, spread the word by sharing it. Let's continue with more strategies that will change your financial future.
To dive into staking, you first need to choose a cryptocurrency that operates on a proof-of-stake system, and then a platform or wallet that supports staking that currency. Next up is doing your homework to understand the specific details of staking for that currency, such as the minimum staking period and the expected return rate. It's crucial to know that by locking up your cryptocurrencies for staking, you won't be able to sell them for a certain period. You need to be prepared for this and consider the risk of locking up your assets in a market that is, by nature, unpredictable. But for those who are willing to venture into this world and manage the risks, staking offers an advanced and potentially lucrative way to generate passive income. It's not a strategy for everyone, but for the well-informed, bold, and forward-looking investor, staking can be a powerful tool in your passive income arsenal. Diversifying is the art of not putting all your financial eggs in one basket. It's the master strategy that allows you to navigate the sea of investments with a life jacket that protects you against market storms. So, how do you ensure that your investment portfolio is well-balanced and diversified? First, understand that diversifying means more than just having a variety of investments. It's about selecting assets that don't move in the same direction at the same time. When one part of your portfolio is down, another may be up, stabilizing your earning potential and mitigating risks. Let's start with the basics. The dividend stocks and real estate investment trusts we've already mentioned are two excellent starting points. But let's add more ingredients to the mix. We can talk about bonds, which are loans you make to a company or government in exchange for regular interest payments. They're generally less volatile than stocks and can be a safe haven in times of uncertainty. Don't forget about exchange-traded funds, or ETFs, which allow you to invest in a broad range of assets through a single fund, replicating the performance of entire indices or sectors. With an ETF, you could have a slice of the tech market, industrial sector, commodities, and more, all in one transaction. And of course, there's the world of cryptocurrencies. Beyond staking, there are other ways to diversify within this space, such as investing in different coins, utility tokens, or even exploring the emerging field of decentralized finance, or DeFi. Modern financial tools and apps allow you to automate this diversification. You can set up your investments to be automatically distributed among different asset classes, adjusting over time to maintain the proportion you desire. Diversification doesn't eliminate all risks, but it significantly reduces the likelihood that a single event will impact your entire wealth. So, as you build your portfolio, think of diversification as a defensive technique, where your goal is to protect and grow your investment over time, no matter what happens in the world. Your investment strategy doesn't end when you choose what to invest in. It's also about how and when you make those investments. This is where careful planning and automation play a crucial role. With the right setup, you can schedule deposits and asset purchases, meaning you'll be investing money regularly, without having to remember to do it manually. It's the set it and forget it of the financial world. Implementing automatic investments is making the most of the power of compound interest. Let's give a simple example. If you decide to invest a fixed amount every month in an ETF or in dividend stocks, you're leveraging what's known as dollar cost averaging. This can help you buy more shares when prices are low and fewer when they're high, resulting in a more favorable average purchase price over time. And here comes the exciting part. By automating your investments, you're also building financial discipline. You're making saving and investing an integral part of your life, without any additional effort on your part. Moreover, many modern investment platforms offer tracking and portfolio management tools that let you see how your investment grows over time and adjust your strategies as needed. We've traveled an impressive path today, discovering how real estate investment trusts, dividend-paying stocks, and staking in cryptocurrencies can be your allies in the quest for passive income. But knowing is not enough. Action is what counts. Now it's your turn to take the information and turn it into action. Don't close this video without participating. Tell us in the comments which of these strategies has intrigued you the most and which you plan to explore first. If you've enjoyed this journey through the less traveled path to financial freedom, show your support with a like and share this video with someone who would benefit from this information. Subscribe for more financial discoveries, and don't forget to activate the notifications to be the first to take advantage of the investment strategies we bring you every week. Until next time, keep investing, keep planning, and most importantly, keep growing. See you in the next video.